hi, my name is Amy Bell, and I sit in a very unique business at JP Morgan called social finance. And the underlying thesis or motivation for us being in that business is actually sort of what brings the three of us together. Because it's not an everyday occurrence that you have a foundation, a large international bank, and an East African fund manager working in cahoots. And so the reason that we're in this is we, a few years ago, saw sort of a rising interest from our clients, the investors of the firm, who wanted to think about ways that they could use their investments for a greater good. So thinking about ways to generate return, but also generate positive social and environmental impact, sort of a response to the movement in socially responsible investing to kind of screen out negative and to have sort of at least at a minimum a neutral impact. It then quickly sort of grew from there that, actually trying to have a positive impact or something that generated financial return was a really exciting way to think about addressing social and environmental challenges, particularly where there are limits to philanthropic capital. And so we set up a business called Social Finance that supports this market for this type of investment, which we call impact investments. So what differentiates or defines an impact investment is that it's an investment that is meant to generate some level of financial return. What that level of return is depends on the investor. But it's a vehicle that sits in between what you would think of as traditional charity or philanthropy and traditional investment, which has obviously financial return as the primary component, and says that for it to be an impact investment, there needs to be a real intent or commitment to actually create that impact. So in addition to measuring the financial return of our portfolio, for example, at JP Morgan, we also evaluate whether or not it's had an impact on the population we set out to target. So at a broad level, we have a geographic scope as an investor for around the world. We look at multiple sectors, and we're looking to target improved livelihoods of underserved populations very broadly. So we've intentionally sort of drawn a wide circle around what we can do as an investor, because the goal for us is to think about how we can, as a financial intermediary, drive more capital into this market. And given that, because this is a new market, something that's really important to us is thinking about the right partners to align ourselves with. And so a number of the transactions and opportunities that we've done over the last 2 years since we've been an investor have been linked to really strong partners. So the Gatsby Foundation, the Gates Foundation are good partners, and we worked with them, as well as the Rockefeller Foundation, who's also an investor in this fund, to look at Africa, and specifically looking at it having an impact on smallholder farmers as a population of people that's greatly underserved in Africa. And we spent a long time scouring the continent for who that fund manager could be. And Tom Adlam and his team were the clear leaders, and we went through some process to get to where we are today, but very excited about the things that we're seeing and the impact that we're having. So that's sort of broadly what brings JP Morgan here. Maybe I'll pass it to Ian to talk a little bit more about specifically around agriculture and what they're doing there.